hashtags. For that, I'd like to welcome in TD Ameritrade Network contributor Jenny Horn, and joining us is the co-founder of LikeFolio.com, Andy Swan. Guys, we're talking some fun names here today, but ones that I'm sure Andy's had a lot of questions about over the last few months. So, Jenny, we're talking some meme stocks.
Yes, the meme stock. So AMC, of course, has been, has gotten this heightened attention from all these Wall Street bets traders. It's up about 80% over the last month. But I think it's really important when we talk about these names to sort of separate some of this, social media meme noise from the actual company. So actually, in the next quarter, they'll report, second quarter in August, their revenue is expected to grow about 1,800% from last year. And a lot of people are saying this sort of marks the comeback of the movie theaters. So we saw the 9th installment of the Fast and Furious franchise released this past weekend, and it had $30 million in sales on Friday alone, with $70 million over the weekend, putting it at its best, the best movie opening for any movie since the beginning of 2020. So the next test will be Marvel's first film since the pandemic began, which will be Black Widow, which is set to release in the second week of July. So we do have all of these different huge, big box office films coming. So this will be a good thing for all these movie theater companies alike. But of course, this being a meme stock, it is important to discuss that because, outside of its pandemic comeback, this army of retail investors who own AMC, who call themselves apes, believe that a large short squeeze in the stock is coming. So as of June 15th, Morningstar listed over 85 million shares held short relative to a float of about 449 million. So this is important to keep in mind, really. I mean, what I think, though, is there's misinformation out there. These so-called apes really cannot save AMC. What matters to AMC is their operating performance and only their operating performance for their future. So in full transparency, it was very hard to find tweets that sort of separated this, Reddit-induced noise from the actual company and what the company actually does. But nonetheless, I was able to find tweets. It's just, right now it is very mixed on social media. So our first tweet of the day says, AMC offering promotions and a membership for discounts, like all-you-can-eat popcorn with free unlimited refills on any size popcorn purchase. This will get people back into theaters. So we have coworkers that have the AMC membership and loved it before the pandemic. So I'm curious how this holds up in light of the last year. If people had canceled their memberships, if people now are interested in, reigniting their membership. That is something I think is a really interesting conversation. But our next tweeter actually compares AMC to the broader movie theater space, which I think is important, which says, I only go to AMC theaters now. AMC is greater than any other movie theater. It is what it is. And I actually had to look up what other theaters there really were other than Regal, which is what was by where I grew up. There's, of course, Cinemark and IMAX being the other competitors. But Andy, I am very curious because you are the expert on all things, social media. If the return of people going back to movie theaters warrants, some of the run-up we've seen in the stock, of course, it's impossible to separate given Wall Street bets and all of this noise. But, are people actually going back to movie theaters is my question, I guess.
Yeah, it's a really good question. We see movie theater demand definitely increasing, as we head into the summer and things sort of open back up. But we're still well below pre-pandemic levels. In fact, down 59% versus 2019. And that's really the benchmark that we're going to use. And so that's concerning. We really want to see how this does over the holiday weekend, July 4th weekend, and into the later summer as people get more and more comfortable. And also as some of the content starts to come into these theaters, there's the issue is not just how many people want to go to the theater, but how many movies are ready to be deployed into theaters versus simply streaming those. Those decisions a lot of times were made, several months ago, if not quarters ago, in terms of how these movies were going to be released. And with the uncertainty around theaters, a lot of content makers were opting to go, the streaming route for the theatrical releases, and we do see that, consumer demand for that's up 92% versus 2019. So there's been a big consumer shift in behavior. People much more likely to stream a movie, a theatrical release, than they are to go to the theater versus that 2019 baseline level. But I think there's still some time for that trend to shift before we know that it's really doom and gloom for AMC and these others. But AMC does have the largest market share in the industry. It's going to be the leader when people are ready to start coming back to the theaters. There's glimmers of hope, and it's just a little bit too early to tell, but that competition from streaming is definitely a big hill to climb.
You know, Andy, there's a long-term and a short-term story with AMC, and let's deal with, the long-term is it's going to be a long dig out, right? As movies start to come back and theaters start to, gain confidence of customers. But the short-term story is an age-old story that is, I can't control the seas, but I can control my sail. And this CEO of AMC, Adam Aron, he's my hero because he said, okay, you want to squeeze the stock, you want to run it up to levels, I'm going to bail out my company by issuing stock and raising cash to get myself through this chasm until demand comes back up. So, he didn't create this problem, but he's certainly taking advantage of it to keep his company well funded. So I think he should get an award for how he has managed, not with, he hasn't turned the meme crowd off, but he's certainly used them to keep his company healthy, correct?
Yeah, and I would say also, I think we tend to underestimate the meme crowd. I think that was a lot of their, initial reasoning for doing this. They've gone to a new level. It's not just pump and dump anymore. You don't have to dump, right. And they figured that out. You don't have to dump. So they can pump and they can pump and they can try to turn these businesses around. And you saw it with GameStop, and they're injecting a lot of cash. They're making these companies much more viable on the secondary market, as well as issuance of debt. And like you said, these CEOs are smart. They're going to take advantage of that. And that was part of the purpose of the meme crowd from the very beginning. It's not just pump and dump like we're used to thinking about 15, 20 years ago in penny stocks. These are real companies with real businesses that these investors felt were unfairly targeted, and that they could help turn the company around, not just pump the stock. And I think that's a huge difference as we move forward.
Andy, along those lines, I guess the reason this space has come into scrutiny, let's say, is that you can look at both of these businesses. And I throw GME in here as well, as they're kind of the two main ones. And the difference between this and maybe a tech stock that has questionable fundamentals is that the story was always, you could say, that there's growth. There would always be a reason, right? In these cases, GameStop, a video game store, you can buy the games directly on the console now. With AMC over the last, 52 weeks and some change, there's been some, obviously, changes in how movies are released, maybe some behavior changes as well, and I think it's reflected by your data. So the reason this was so much in the spotlight and scrutinized is because people are trying to say, hey, the fundamentals aren't good going forward either, so there's really no reason these are higher. But to your point, the intentions are good and excitement's there. I mean, to me, this is just volatility to the upside that you see in Bitcoin, you see in other things. It's just being highly scrutinized because someone thinks that the prospects for these businesses isn't good. And so when you look at this is in a way a lifeboat for these companies, right? This is a chance for them to reinvent and recreate their businesses and move forward and issue shares that create capital. This can be a good thing, and just because we have a hard time seeing how they're successful now doesn't mean that they can't continue to be successful into the future and actually innovate and be more successful, right? Isn't that the idea behind all of this?
Yeah, absolutely. That's it. That's the entire idea. I think they're also creating this meld between a shareholder base and a consumer base that, in theory could have been, one of the key aspects of Wall Street itself and of retail investing itself. I think that this has been going on a little longer than we think. It gets a lot of attention right now because of Wall Street bets. But, if you look at Tesla, a lot of Tesla shareholders, end up buying the car and vice versa. I think that there is this movement of an ownership type of economy, and I think we should embrace that in a lot of ways. Now, I'm not saying that AMC is worth what it's trading for today. It might be worth less, it might be worth more. I just know that it's good to have people involved in the process, and we are underestimating a lot of times the intelligence and the due diligence that these folks are doing before they get involved. A lot of followers, but the leaders of these movements have done a lot of research, and they do understand the fundamentals of the business. And I think especially with GameStop, you look at where it was and where it is, I don't know why you can't say GameStop can't be worth billions and billions of dollars more than it was when it was about to, be pushed into the ground by hedge funds. I mean, it's a good business. It's just no one could go there during a pandemic. And now they can reinvent themselves. They have the capital, they have the currency in their stock to make acquisitions, to do the kind of things to reinvent themselves that these investors and consumers want them to do. And so it could actually work. And I think people miss that.
I think that's a great point. Final question here, Andy. I'm sure you get this from all your clients, and I just got to see. I mean, it could be as simple as a no or a yes. Is there a correlation to the excitement that you see on social media around this? Just simply mentions of the companies and the performance, or is it just, hey, it's too hard to
LikeFolio even offers a product around it where we can alert people when stocks are getting significantly more social buzz than normal. Because there is a correlation. There is a correlation between chatter, excitement around the stock, and the potential, the possibility of a short squeeze that can go multifold. A lot of them fizzle out really quickly, but some of the winners can be very, very, very big.
And I think that's an awesome feature of what you're offering to your clients, but also it shows that the world's changing, particularly within financial markets, and there's new indicators, there's new things to follow that can potentially help you get that information to help you make an investment or trade going forward. Andy Swan, always a pleasure. Thanks for joining me as always. Jenny Horn as well, the co-founder of LikeFolio.com. Andy Swan, TD Ameritrade Network contributor Jenny Horn. Kevin.